Morning, everyone. Hope everyone is doing well. So today I wanted to talk about some crypto news, Bitcoin news, charts, news, along with I did a deep dive into Marathon and their miners, how many of their miners are bringing on board this year, next year, and what their possible earnings are going to be and revenues. So that's going to be towards the end of the video. Let's jump into the charts. So on this one, we're looking at the Bitcoin chart over the last couple of days. This is for the 4-hour chart. Bitcoin right now is trading at 37,971. It is obviously trading down from its high of almost 40,000 yesterday. We had a nice spike up, and then obviously we had a pullback to it. But we're still looking at the trend line here, and we're looking like we're trending up. The RSI is trending down, which is always a great thing to see. So we'll have to keep an eye on it. There's some obviously Bitcoin news with the infrastructure bill that we're going to talk about here in a second, that I think is going to make a difference in the price charts going forward. If we look at Doge, I mean, you're seeing a similar thing here. We had a nice uptick yesterday, and then we're coming back down just like Bitcoin. So Doge is trading right now at 19.6. Stellar, similar pattern like yesterday. I don't know why there was so much exuberance in the market with crypto. Everybody was buying, and now everybody's selling. We're seeing the same thing. So Stellar is trading at 27 cents. Litecoin, similar pattern you're seeing here. It's at 137.85. We're still seeing the same trend. Trend is slightly higher, but the RSI is obviously lower, which is always a good sign. Cardano has been having a nice trend up. I mean, you can see it here on the trend line. If we look at it, let me see if we can do a trend line here. So if we go from here to here, we have a nice trend line going up. But if we also do a trend line here, right on the same time frame to here, we're kind of trading sideways on the RSI trend line, which isn't bad or good. It's kind of flat right now. So, but we are going up, so that's a good sign, I believe. Ethereum is right now trading at 26.12. Ethereum has the same kind of trend line as Cardano. You know, we have a nice trend line going up here on the stock, on the price, but on the RSI we are trading kind of a little bit down, but mostly sideways. So it's interesting. We'll have to take a peek into it in the next couple of days, see how it does. Obviously, this last little gap up here, if we adjust the trend lines, we have a large trend line up here, but then we also have a slight incline to the trend line on the RSI. So that might be a little bit concerning. We might be looking for a pullback here in the next couple days to a week or so. Hive, we talked about Hive yesterday. We went and did a deep dive on them. They were finished trading yesterday at 278. Pre-market, they're up 2 cents to 280. If you want, you can check out the video from yesterday on that one. I went into all the miners that they have right now coming online, what their potential earnings are going to be. And then today we're also going to take a look at another mining company for cryptocurrencies, is Marathon Digital. Went way back into, I think it was like 2017, 2018, from the press releases, and just calculated all the miners that they have. So they're trading at 28.71 right now. Pre-market is flat, 28.71. So we'll see where that price could possibly go. Let's jump into the news here really quick. There's a couple of things I want to talk about. First one is senators file crypto broker amendment to infrastructure bill after industry backlash. So we talked about this over the weekend and last week, I believe, where the Congress proposed a bill, obviously for the infrastructure bill, and in it they had the cryptocurrency amendment in there, or the language in there that would basically make all the miners responsible for also reporting on, you know, tax transactions and things like that, which was just silly. So they made an amendment to it after a lot of backlash from the industry. So let's take a quick read of the article here. Some U.S. senators introduced an amendment to the infrastructure bill Wednesday, attempting to clear up confusion about cryptocurrency brokers based on language in the existing version that could roil the crypto markets if passed. The update, excuse me, filed by Senators Ron Wade, Pat Tomey, Cynthia Lemons would specifically ensure the term broker excludes validators, hardware and software makers, and protocol developers. This is a good thing. It would be impossible for those guys to comply with the way the law was written in the first place. If included in the final bill, the amendment would be a win for the crypto industry. Those whose advocates have said was a risk of losing innovators and investors interested in doing crypto business in the United States. The original language could also force some companies to shut down if they can't comply or move offshore, these advocates said. And this was on this is from CNBC. The Senate initially included a crypto in the infrastructure bill as a pay-for provision that would help generate revenue for the bill through increased tax compliance on crypto companies. These parties would have to file reports to the IRS. I believe it was the 1099 forms. The backlash from the crypto industry was a response to the bill's broad definition of broker to include entities that don't actually broker digital assets or that don't have customers whose information needs to be reported to the IRS. By clarifying the definition of a broker, our amendment will ensure non-financial intermediaries like miners, network validators, and other service providers, many of whom don't even have the personal identifying information needed to file 1099 with the IRS, and not subject to the reporting requirements specified in the bipartisan infrastructure package, Tomey said in a statement shared with CNBC. Currently, cryptocurrency exchanges may provide investors with a Form 1099-K detailing the transactions they've performed. The IRS gets the information too. Tomey, who often voices support for the crypto industry, is the ranking member on the Senate Banking Committee. Biden is the chair of the Senate Finance Committee. Loomis has emerged as one of the Bitcoin's biggest advocates. They go on to say, our amendment makes clear that reporting does not apply to individuals developing blockchain technology and wallets. This will protect American innovation while at the same time ensuring those who buy and sell cryptocurrencies pay the taxes they already owe. Weinstein statement, which is, I'm fine with that. I have absolutely no problem with that. It would actually be a good thing because right now, it's hard to get a 1099 that actually makes any sense from the exchanges. So anything that would be like the ones you get from Schwab, E-Trade, or anything like that, where it breaks down everything that you bought, what price did you sell it at, did you make a profit, did you lose on it, would be a good thing in my view. Clarifying the provision would not affect the reporting requirements on crypto exchanges like Coinbase that operate on behalf of customers. Like I said, according to the Blockchain Association and Crypto Trade Association that works to change public policy at the federal level. The group said it supports the amendment introduced Wednesday in a joint statement with the crypto policy-focused nonprofit Coin Center, Coinbase Square, and venture capital firm Ribbit Capital. The development of the crypto and financial innovation generally has enormous potential for the American economy and the American people through increased job creation and GDP growth, they said. It should not be subject to potentially devastating legislation without public participation and public comment. I agree. So it's a win for us, guys. I mean, we'll take it. It's absolutely a win. Anything that makes it more, what's the word I'm looking for here? Anything that makes the verbiage more detailed to what it's supposed to do, all the better. The more vague it is, it's going to be a nightmare. And then Bloomberg, intelligence report, Bitcoin price on track for $100,000. This is from Bitcoin Magazine. A new report from Bloomberg Intelligence suggests that Bitcoin price may soon approach 100,000 should historical trends continue. Interesting. So let's see what they have to say here. This month's Bloomberg Crypto Outlook reports a bullish future trajectory for Bitcoin, stating we see performance parallels that could get the benchmark crypto back on track towards $100,000. The intelligence report stated what's changed in about 3 years is sufficient to sustain more of the same for most of Bitcoin's history, rising prices. Supply is declining while demand and adoption are rising in most countries that welcome open disclosure and free market capitalism. Excuse me. The report notes that Bitcoin is becoming a digital gold in a world going that way, and that free market capitalism is on the rise via digital assets, and unless enduring trends reverse, the U.S. dollar and Bitcoin stand to be primary beneficiaries. Interesting. The Outlook noted that Bitcoin provides to developing nations such as El Salvador and other populations that are largely unbanked. Bitcoin is helping to bank the unbanked and the primary up-and-coming country. China doesn't permit the free flow of capital or disclosure. On Bitcoin's disruption of traditional finance markets, the report stated when views that counter long-term trends excuse me, becomes consensus, probabilities often tilt back towards enduring trajectories, which is the bullish outlook we see for Bitcoin. The report also contained many graphics depicting the rise of Bitcoin compared to declining bond yields, gold prices, and altcoins, commenting gold appears increasingly naked if not paired with Bitcoin. The report noted fundamental underpinnings of Bitcoin and went on to define its virtues as a hedge against inflation, represents rapidly advancing technology pressuring inflation and supporting quantitative easing, which buoys the stock market. The Bloomberg Financial Intelligence Report also perceived bullish signals when pairing Bitcoin with crude oil, stating the Bitcoin hash rate and crude oil may appear to have little in common, but some reversions from the extreme levels has bullish implications for the crypto market or for the crypto. On the China exodus, Bloomberg noted that Bitcoin hash rate correction is likely complete, which I think is also, I think all the China miners have moved out. The sharpest ever plunge in the Bitcoin hash rate is likely over, and the price is set to keep recovering if previous patterns play out. Yeah, so I mean, we're seeing the hash rate increase as the miners have been moving over to other countries, and that's probably going to continue on while they're setting up shops elsewhere. So I think it's a trend that's going to continue on. The plunging hash rate reflects this discombobulation among China's miners and is a temporary dip in the discovery and Bitcoin price trends. As we see it, the report continued. The Bloomberg Crypto Outlook even weighed in on the Bitcoin energy debate, stating gas flaring is a problem that Bitcoin mining is helping to solve, in addition to enhancing renewables and helping govern power grids. Gas flaring, if you're not aware of what that is oil companies where they're they're drilling for oil. They also have gas pockets that they're basically burning burning it into the atmosphere. So a lot of miners are moving to those locations. They're putting up these big containers, and they're using gas generators to create the energy to power these Bitcoin miners from those gas off-flarings. The report also made a tenuous connection between Bitcoin and the oil markets, writing the dip in the Bitcoin bull market appears over, and an end of the bounce in crude oil may provide the underpinnings. Bloomberg also commented on Bitcoin's dominance over centralized alternatives such as Ethereum. The number 2 cryptocurrency is likely more at risk to a pullback in the stock market than the store of value Bitcoin. And we kind of saw that in the charts. If we look at the charts again, I mean, we're seeing that Ethereum had a nice leg up here. So if you look at Ethereum right here, we might be looking for a small pullback in the meantime. So we'll have to keep an eye on it. Okay, now let's get into the Marathon one. Let me see where I put it. There it is. So here are all the numbers that I crunched last night for Marathon from all the press releases when they're buying new miners, whether they're the Ant miners or some other ones. And we'll go into it here in detail a little bit, just to guys give you a breakdown of what I've learned. An interesting tidbit was that I learned that Marathon used to be Marathon Patent Group, which was a patent troll. You probably heard a lot about patent trolls back in early 2010s when Google, Apple, and some of the other phone makers were all battling for the supremacy of the phone market, the smartphone market. You had a lot of cases where people were fighting over intellectual property, patents, and things like that. And you heard a lot about patent trolls back then and how the laws need to be changed and updated for the 21st century with these patent trolls. So in 2017, Marathon Patent Group acquires, I think it was Global Bit Ventures. I spelled that wrong here. Bit Ventures, and they, at that time, when they acquired them, got approximately 1,000 GPU miners. They had a mega hash of $250,000 or 250,000 mega hash. So currently, those are profitable at about $19 a day at current price levels from last night. So on Ethereum. Then in January 12th of 2018, they announced they're buying another 1,300 of the S9s from Bitmain. February 8th, 2018, they announced another 1,400 ant miners that are at 19 gigahash. October 25th, some more ant miners, 6,000 more at 102 gigahash per miner, which was a huge increase from what they were doing here. And then May 11th, 700 of the M30S Plus. I think those are the Avalons. And then May 12th of 2020, another 660 of the S19 Pros. May 19th, 500 more of the S19 Pros. June 11th, 2020, 500 more of the S19 Pros. And then July 29th, another 700 of the M31S Plus, which I think are the Avalon ones. And then on August 14th, 2020, they announced 10,500 of the S19 Pros from Bitmain. October 26th, 2020, 10,000 more of the S19 Pros. And then December 9th, 2020, the S19J Pros, another 10,000 of those. And then December 28th, 2020, they announced the purchase of 70,000, which was a huge purchase. And those were running at, I think I have this wrong here. Yeah, those were at 63, I think, gigahash. I can't remember now. But in total, what they were mining, terahash, sorry. So here's their petahash by the reporting on the miners that they have. So total petahash would be around almost 10,000 petahash, which is 1 exahash, I think. Here's a combined terahash speed, gigahash speed. And then I'm using gigahash speed because it helps me with the price projections or what the miners are actually making through what2mine.com. So you can punch in the numbers and you can figure out what they're actually earning on these. If we scroll over here, based on the amount of miners, and then they also, just recently in the last, this week, they announced another 30,000 S19J Pro miners, which are going to be mining around 3,000 petahash. But those aren't coming online until between January 22 and June 22, so I'm not counting these in the final numbers down here. So looking at the numbers, based on what I was able to find out, this is their yearly projected, or at least what I calculated, their potential total revenue. This doesn't include any electrical costs, any operating costs, anything like that. This is just pure revenue from cryptocurrencies. So the year total, by the end of the year, they should be running at a rate of about 1.272 billion revenue on these miners, if everything comes into play where they have everything installed and running at their data centers. So if we look at the price right now, the price of, what do we have it? Current price was 20, where did I put that? I didn't put it in here. But if we look at the price of Marathon, I think I used last night's closing price of 28.71 to figure all this stuff out. So shares outstanding right now is about 99,477,000. Current price to earnings ratio is 39.94. Current EPS on Yahoo Finance is at 72 cents per share. Current market cap is 2.8 billion. And then we can figure everything else out. Okay. The other thing that I kind of noted in here was rough estimation on the cost of the miners that they spent. It's about 203 million based on, I think I used, what did I use here? $1,800 per miner. There might be some more shipping costs involved in that, so it might be 250 million, 225 million, I'm not sure. But this is just a rough estimation on it. They didn't provide the pricing that they were paying on those, on some of those. Okay, so total revenue for the year would be 1.272 billion. EPS, based on the amount of shares, which was 99 million, would be 12.79 earnings per share. At a PE ratio of 20, we're looking at a price, stock price around $255, just without taking into account any of, obviously, of the expenses. So even if you take out 25% for expenses, you're still looking at what, 200 some dollar stock price. And then if we look at the PE that they're using current, which is the 39 current one right here, 39.94. We're looking at a price of 472. Take away 25% of that, so we're still looking at around a $400 stock price. But here's the interesting thing: if crypto from here till the end of the year goes up 2x, if it goes up 2x, 3x, 4x, here's what their projected revenue is. So at 2x, so meaning Bitcoin would be at around 70,000 or so. The projected revenue would be around 2.5 billion. 3x would be 3.8 billion. 4x would be 5 billion. Obviously, this doesn't take into account any hash rate increases, obviously. So if the hash rate of the network increases, you're going to see a decrease in the amount that they're actually going to be earning from that. So even if it decreases 50% like we used with Hive blockchain, you're still looking at a decent amount of money. So you're looking at possibly, what is that, 1.25 billion. And then you're looking over here at 1.9 billion and 2.5 billion here. EPS would be 25.59, 38.38, 51.18. So if we use the price to earnings multiple of 20, you're looking at a $511 stock, $767 stock, 1,000. And with current price to earnings ratio, if we use that, you're looking at $945 stock, $1,417 stock, and $1,890. I'm going to be more conservative on that. I would go down and just cut everything in, 50%. So if we're looking at just doing the 20 price to earnings multiple, you're looking at a $250 stock. I mean, right now it's 28, almost $30. You're looking at a huge increase in value over that 5-6 months. So I think it's a no-brainer to invest in Marathon, at least right now. Do your own research. Obviously, this is not financial advice. But I think the upside potential is far greater than the downside potential, especially right here, especially if they do get all those miners on board. So I hope you guys enjoyed that. I know it's a lot of numbers, a lot of crunching. Let me know if you'd be interested in getting this data in the comments down below. Let me also know what you think about it. Do you also agree with the current legislative bill on the infrastructure bill with the amendment on it? And where do you guys see crypto going? Bitcoin, Ethereum, Cardano, all that. Let me know in the comments. I look forward to you guys' comments on that. Thank you so much for watching. That's all I have for you guys. Have a great day. I'll see you guys tomorrow.